Yeah, I guess for some it's not morning. For me, it's 11:59 in the morning, so morning's almost over. I would really like to find a time that works for everybody, where we could have more people attend the actual live version. But I know with so many different people, I think we're right at 80 people now in our group, right around that mark. So it's difficult to accommodate everybody's schedule, but maybe in time we'll find some kind of sweet spot and sweet day where we can hold these, where we can have the most people that want to attend the live session have that opportunity. I just think it's important in case you want to. I know I've said it before, but in case you want to ask a question or clarify on something. And also, I've watched a couple of those videos. Sometimes there's some video issues where a portion gets cut out. The person that's recording may lose connection for a few minutes. So and you might miss some vital information that you wanted to know. So always, if you can, attending the live version is recommended. So hopefully I don't have any interruptions this coming week. As soon as I'm done with this class, I'm going to take my sweetie up to a Care Now. She's not getting any better. And, over-the-counter medicines that we're using, it's not really helping too much. So maybe some prescription meds at this point in order. So, and also want to make sure that she doesn't have COVID. We both are vaccinated, but that doesn't always mean anything. So going to take her there and hopefully get her some stuff where she can feel better. She's a very, very active person, and it's driving her crazy, laying in bed all the time. Okay, let's get started. So one thing that I'm going to point out real quick, by the way, good morning. I always kind of get ahead of myself. So if there's anybody that hasn't attended the live version before that's in here now, there's a channel right above our channel that we're in now. It's called the Questions During Sessions channel. So if you have any questions while we're doing this, just post them in there, and I'll eventually get to them whenever the time is right. And if you could just do me a favor, when you ask a question, if it's directed at me, if you want me to answer the question, if you could just please, @doc, so that it shows up in that gold color, and I'll recognize it that way. I don't miss anyone's question. And if I do, and it has happened in the past, if I do miss a question, please put it in there again. Just copy and paste it, stick it in there again, so that I make sure and get it answered. I don't want to miss anyone's question. So, and also, if you don't mind, just make sure that your microphone is on mute, just so we don't have any unexpected background noise. Okay, the first thing that I want to go over, I know we're talking about support and resistance, and this is part 2 of support and resistance. We're going to dial in a little bit more on this one on trend lines, vertical trend lines, which certainly act as support and resistance as well. I've had a few different people ask me so far that, if the Fibonacci retracements, if they have anything to do with support and resistance, well, not really. It's just kind of an area of where you can possibly expect things to happen. And I wanted to give you guys an example. We'll spend 5 minutes on this just because I had, I don't know, 3 or 4 different people send me a message asking how that played a role. So I want to show you guys that. So basically, some people may not even know what these are, so I'm just going to kind of go over real quick and show a lot of people use these. And the reason that you might want to check them out is simply because a lot of people use them, and because they use them, then they're going to maybe enter and or exit trades based on the Fibonacci's, right? So let's see, okay, let's take this move right here. So go to my Fibonacci's here, hold on. I don't know why that's not popping up. It usually does. So go to my Fibonacci retracements, and what we do is we just click once at the bottom. So we're going from swing low to swing high on this move, right? And we're on the daily chart. So this would be for a longer term hold. And I'll give you an example on a lower time frame chart. We'll pick a lower time frame chart and I'll show you how it works. That way, if you wanted to do, say, an intraday trade based on, fibs, you could certainly do that. So let's take this swing low to swing high, okay? And so what we have here is we have areas where we can expect a bounce, okay? So, when you first pull it up, you're gonna have a ton of them on there, but I only respect a handful of them. Obviously, you have to have your 0 and you have to have your 1 because, where you started. So, you want these other ones. These are the ones that I have checked. I don't care about the 786 or the 236. I think these 3 are the most important. So those are the ones that I have checked. Your results may vary. Put whatever you want on there. And I have them color coded because I'll show you in a second. So, I've got these levels as, like a street, green, yellow, red. And then I'll do the same thing on my extensions. I have them color coded, right? So swing high, swing low, swing high. Okay, so basically when we hit this, that's not correctly drawn. I'm just showing you the colors right now. So if it bounces down here to the 61.8 area, I'm looking to take profit at the corresponding color, right? The 127 area, correct? If it bounces at the 50% area, I'm looking to take profit on the yellow line there. If it bounces at the 38% red line level, I'm looking to take profit at 161.8%, the red line. So that's the way why I color code them so that you can easily visualize, hey, where should I take profit? So in this situation, let's see. So we bounced at the 38.2 level, right? So we should be able to take profit on the red line, right? This should, once again, with the stock market, and everything, not everything's 100%, but based on, trading this strategy, we should be able to, take profit on that red line. So let's see if it worked out. Let me make sure I'm on extensions. Yes. So on extensions, you just basically go from swing low to swing high, back to swing low, right? I don't know why we're not clicking, click. Okay, back to swing low. And boom, we certainly did. So we bounced here on this red line. I'm just going to call it the red level, the red line level. And if you stayed in this trade, this would, obviously we're looking at a daily chart. So this would be a longer term trade, and this is on a contract. We're looking at the ES, the E-mini S&P 500, simply because it's a little more stable, so that you guys can learn a little more cleanly about drawing support and resistance and, trend lines and things like that, versus looking at some crazy runner stock that ran last week. Because when you have news, catalysts, things like that, sometimes the support and resistance isn't, it's not respected. Obviously it can just blow right through support resistance. So we're looking at something just a little more stable. That's why we're going to look at the S&P. So on this particular trade, it certainly would have, and of course you can take profit wherever you want. You want to take profit on the green line, go for it. You want to take profit on the yellow line, go for it. You want to scale out a little bit, here, scale out a little bit more here, and then finish, sell the rest up where 31 times 50 bucks. Well, you'd have just made yourself $15,700 on that longer term trade. That's on one contract. If you bought 10 contracts, 150 grand, right? So, but because this is, I'll just point this out. This is this is S&P E-mini 500. So your contract expired here. So you would actually finished. But if you didn't want to do that, if you wanted to wait for 100% confirmation that we're going to break the zero line, yeah, sure. You can hop in here at 30. These are your contract expiration dates, as far as green lines are. And then where would your stop loss be on this move? It would be somewhere below the 100% line down there. So as long as you stay above that 100% line, then you're good to go. So let me show you one. Let's say, well, hey, Doc, I don't want to trade one over a, whatever that was, 2-3 month period. I'm a day trader. Let's trade something intraday. Okay, that's cool. You can do that too. So let's go to the 5-minute chart and let's find a move. Let's just take this first move here. So let's go back up to our fib retracements. And like I said, I'm just pointing this out because I had several people ask, and let me look here. 2 of those people are in this session, so it'll just help them, in the interim. Okay, so swing high to swing low, right? So there we are. So where did we bounce? We bounced at the 60. All right, and so we're thinking, okay, cool. So this thing looked good. It came down here, it hit the 38.2 level, and it got bought up, went way back up here. We're on a 5-minute chart, by the way. So let's say you took the trade early. Let's see how it would have worked out for you. So let's go ahead and switch over to our extensions. Go from swing low to swing high to swing low. Okay, well, it still would have worked out. So even if you had you got in it early here versus waiting until here, who knows if you were around to see that move or whatever. But even if you did, it still ended up getting up where you could take profit at this red level here. So that's how you use those fib retracements and extensions. I highly recommend that you color code them just so that your eye knows, I just leave them that way. I know where they're at now, but it's just kind of nice and easy. So that's how you use those. And this would have been a pretty quick trade. Let's say you took the trade early on this candle here. Once we bounced down to this level, or maybe even here on this confirmation green candle after we bounced off of this with this red candle, right? So let's say you took the trade here. That would have been at 8 the next day. That would have just been an overnighter. So pretty short-term trade there. But anyway, you can use that on any stock. Doesn't have to be a future or whatever else. These things work on everything. Just keep in mind, they're not always 100%. But like I said, I wanted to go over that just so that some of the people that had questions on it could get just a quick shot. So that's what you're looking for on fibs. Okay, so let's get back to support and resistance, mainly talking about trend lines. I don't know if everybody that's here today was able to attend the session last Sunday, but very informative. There was a lot of things I can maybe hit. Let's see how much time we have here, see if I can hit any high points. Okay. So, again, talking about trend lines, the same thing as, we're talking about horizontal support lines. Let me answer this question real quick. A couple of questions. So AQman asks, I'm just answering this now because it deals with what we just went over, and we're not going to go back over that. Doc, S&P, how do you trade it? What size? How long is your average trade? So that just depends. It depends on, what I'm looking to do. Most of the time I'm trading it intraday, but if I see a really good setup on the daily chart, then yeah, I'll take a longer term. And, you can trade. I typically trade, depending on the trade, I'll trade from 3 to 5 contracts. A lot of the platforms you have to do some extra stuff in order to be approved to trade futures. So check on that. But yeah, it just depends, So for each contract to trade the E-mini S&P 500, for each contract, it will use up $12,100 of your buying power. So get my calculator here. So you're looking at, if you want to trade 5 contracts, you're looking at, you need at least $60,500 worth of buying power. And each tick, it's 25 cents per tick. Each tick is worth $12.50. So 4 ticks is a point. So to go from 42.36 to 42.37, that's a point. That's $50. So it's $50 a point per contract. So if you have 5 contracts, you're making $250 a point. So you asked. Thank you. I hope she recovers fast as well. So AQ Man also asked, which fib is that exactly? Okay, so your first one that we drew is just your regular Fibonacci retracements. I don't know why my thing's not popping up here. Oh, there it is. So the first one we drew was a retracements, right? The one where you go from just swing low to swing high. So I'll do it one more time, okay? So we go on retracements. You go from swing low to swing high. Now, what you're looking for is a particular move, before you had a pullback. So we started at this move and we finished at this move. Okay. So even if we had a small pullback here, whatever, this was the main move, right? Then we kind of pulled back, we pulled back here. So this is the move that we were looking at. And then once you draw that so you start and you click at swing low, and then you click at swing high, that'll place your retracements. Then you go and you change to your extensions, which shows you where you take profit. And from there, you click from the swing low, you click again at swing high, and then you click again at swing low. Okay, so you're just making like a triangle. So that's how you draw it. So hope that helps. I hope it answers your question there. No, it's not what I want to do. I want to do this. Okay, so looking at the daily chart, let's get to our trend lines. All right, so why are trend lines important? So they're important because they can, you can use them to trade a particular trend, whether it be a long-term trend, if you're looking for like a long-term hold, or like something like a swing trade, or they can be a short-term trend, and they can be one that you trade intraday. And also, there's a lot of people, these breakout traders. Not only are they trading horizontal support line breakouts, they're trading trend line breakouts as well, right? So, people that are looking for that, and the more traders you have that are going to trade the similar pattern that you're trading, the better. Because, as I always say, you don't want to be, the lone wolf getting into that trade by yourself. You want a lot of other people getting in there with you. So we all want to be kind of looking at the same thing. And you have 3 different kinds of trends. You can have an uptrend like this one here, okay? And we're on the daily chart, so all of these are, so basically looking at this daily chart, let me just go to the weekly. So I'll start out with the weekly too. So just to get an idea of what the trend is, because we don't want to trade against the trend on that particular time frame. So if we're looking at the weekly chart and the daily chart, then we're probably looking at more of a longer term trade, not a day trade, right? So if the trend is down on the longer term charts, well, you don't want to go long. You if anything, you would go short, because the long term trend is we're downtrending. So not in this particular situation. I'm just saying that on a long-term chart, or whether it's a short-term trend on a 5-minute or 1-minute chart, right? You want to trade with the trend. That's where the momentum's going, that direction. Don't trade against that. Because again, you're going to be one of the few that's entering the trade in the opposite direction, and you certainly don't want to do that. Okay, so let's look at this. This is the weekly chart. It's over a 3-year period. So what would you guys say is our trend? Well, we're on a long-term uptrend right now. So we were on a downtrend here, a shorter-term downtrend. Then we uptrended, and then this was, I think, right around, yeah, this was COVID right here, right? So this was 2020 February, and we just, you guys know what happened during COVID. We just tanked. And then since COVID, look at what we've done. I mean, it's just crazy. That's why bubble, this can't last forever. Look, I mean, look how much we're up, right? So we're up since COVID started. We're up, what is that? 95%, 95%. That's crazy, especially on this particular market, looking at the S&P futures. So now that we know, okay, so this takes 2 seconds. Just click over to the weekly chart. Okay, what kind of trend are we in here? Okay, we're in a long-term uptrend. Yeah, we're going to have pullbacks. Sure. Now, keep in mind, each candle on this chart represents a week, so 5 days of trading time, five business days. So, these pullbacks, yeah, maybe for a week it pulls back or whatever, but the long-term trend, we're in an uptrend, right? So let's verify that with the daily chart. So are we still on an uptrend in the daily chart? Yeah, for sure. So what we want to do is we want to find the absolute lowest point on the chart that we see to start doing our trend lines. So, and I'm going to draw some trend lines on them shorter term charts as well. I just want you guys to know, if you're looking for swing trades and things like that, they can help you if you're drawing trend lines on these longer term charts. So what do we want to do when we're drawing trend lines? Kind of like support, just like we were drawing horizontal support. We want to try and find as many touches or kisses, some people call them. Some people call them U-turns because they go down and they hit the trend line or hit support and they make a U-turn and go the other direction. You call it whatever you want, retracements, pullbacks, bounces, direction changes, whatever. They all mean the same thing. So we want to find as many points as we can. So right here, well, yeah, we did start at the lowest point, but we're really only connecting 2 points here. We can go ahead and draw that there. But is it really going to help us much? Well, not really, because look how far we're trading off of that particular trend line now. So we want to look for more touches. So do we want to? So let's play around with it here. Let's say, okay, well let's try this next low, right? So which low is lower, here or here? Looks like this is lower. So let's try this next low. We'll go from here and we'll try and connect as many as we can up here. And that's starting to look a little better, right? We can draw from here. Now, I'm seeing all this already before I even draw them, but I'm just going through those steps so that, if you draw one, you're like, man, Doc don't know what he's talking about. I drew that trend line and it's nowhere near. How can I take a trade off of that? That's why I'm going over this so you guys can, see how you just, check different things. Because, these trend lines aren't always, 100% either. They're just areas to look at for possible, change in price direction. So, we threw a couple trend lines up there, right? So which one are we going to pay attention to? Well, I'll tell you, you can leave this one on there because as it's trending up, this may, if it breaks down through these other trend lines, right? That will let you know, okay, well, hey, there's the next level. Of course, you're looking at your horizontal as well. Let's say you had some horizontal price levels here. I don't know, say we had some resistance here. We had some support. I'm just doing this really quickly. These aren't going to necessarily be perfect. Doing it quickly for just time's sake. So let's just say we had some of those there, right? So we had also some horizontal price levels that acted as support or resistance. Then, once you're breaking through all of those and you break through here, if you didn't draw this trend line here earlier, going up this way, you might miss it. And So what are you expecting? You're expecting for it to come down here, possibly, in this area to see a bounce, possibly, right? Well, what if it bounces here and you're like, whoa, man, why did it bounce there? Well, there you go. So that's why you might want to stick it on there. If it gets to where it's just too much on your chart, it shouldn't, because you're drawing this on the daily. So once you dial in, once we dial into this area right here, you're not even going to see this trend line, right? But once you start trading in that price area, you will. And what you can do is you can actually go here and you can change the color on it. I think I told you guys about this before. Let's say you want to make it yellow, all right? So you make it yellow. And what does that tell me? Well, it tells me, hey, this is like an old trend line from the daily chart, right? So my normal intraday trend line would be, this color here. And then, the ones that I make a specific color would be, okay, because, you might look at it and go, hey, why did I draw that? Well, you make it a certain color and then you know that correlates to a particular time frame or a higher time frame. So keep that in mind as well. So, you're drawing these on this. So let's just keep them here just for fun's sake here. And we'll change the color on these to know that we drew them on the daily chart. Okay, so now let's go over, let's draw a couple of resistance trend lines here. Come on, where are you at? Sure, why my little pop-up's not coming up? Thinkorswim's not liking me today. Okay, so what are we looking for when we're drawing these trend lines? Well, we're looking for swing highs and swing lows, right? So this is a swing high. This here is a swing high. I already drew some with these price lines. You can draw them with trend lines. It's totally up to you. So let's, so here's a swing high here. So let's draw a trend line right there. And is that an exact trend line? I mean, does it look good to everybody? This is what you have to ask yourself. You have to look and see, okay, are we kind of respecting that trend line, or could we dial in a little tighter and get a better representation of where we're trending? So like I said, they're not always exact. It's not an exact science. So maybe we want to start a trend line maybe here, right? And draw like this, okay? And then you do that a few different times and you see which one is kind of being respected, okay? That gives you a better picture of what's going on. And maybe you leave this one on there if you want to. Just for, like I said, it's not going to muck up your chart too much because you're going to be dialed into a lower time frame chart anyway. So just for fun, we'll change this one to yellow. And we'll change the other one to yellow as well. Okay, so we have a pretty wonky looking daily chart here, but we have useful information, right? So let's dial into this. Let's go into, let's say we're going to trade this today on the 5-minute chart, right? Oh, another reason I wanted to use the ES is because when we're looking at these charts, let me just give you guys an example. Let's look at PROG. When I look at these charts, you got this gray, and maybe it's a little bit harder for you guys to see. So because you've got pre-market and after hours, which those don't exist with futures, so it's always nice and light. I think it, shows the trends a little bit better. So we would go here. So we're trading intraday, and you see all those lines that we drew on the daily chart, you don't even see them. So don't be afraid to do that. It's not going to muck your chart up too much. So let's say we've got a price line here. That was our high. We've got our low down here, 42.2150 there. And what did we have here? Well, we had some buyers coming in this area, right? We had a swing low here, swing high here. So this is how quickly you can do it. Go through and identify the support and resistance levels. There, and you had, sellers coming in here. I don't know that I would draw one here. Maybe you draw just a trend line there, horizontal trend line, because it, only touched twice. But again, it's just another area to kind of key on. So now all of a sudden you jump up there. So weird that it's there sometimes and others not. So let's draw a trend line here, a horizontal. And what that tells me, this is just the way I do things, is when I draw a horizontal trend line versus a price line, is that tells me that it's not as significant, okay? But it's still an area to look, because in the past, we did have buyers come in at, that area. So back to trends. So once now we've drawn, a handful, and you can keep going through here, and the more obvious they are, the more you should focus on them, because the more obvious they are, the more people are going to see them. If you're looking around, like you're playing the Where's Waldo game, for 5 minutes, John, is this a support level right here? Then it's probably not. It's probably not one to focus on. Focus on the obvious ones. And then you can always dial in a little bit deeper, shorter term charts where you can, be a little bit more detailed in what you're looking at. We've got a little background noise on somebody here. Skibberdoodle, do you mind to mute your microphone for us? Thank you very much. I appreciate that. Okay, so back to where we were. All right. So let's do some vertical trend lines here on this 5-minute chart. Let's say we're going to trade this intraday. Okay. Maybe this is a little too big. All right, so let's start here. Let's say that we're going to trade this particular trend. So is this trend a short-term trend or a long-term trend that we're looking at here? Well, it's a short-term trend. We're looking at the 5-minute chart, short-term trend. Maybe I didn't draw that perfectly. I'm kind of being in a hurry here. Let me dump that one and do it again. Okay, a little better. All right, so we're trading in this trend. Maybe we identified it, here. We realize, okay, we've got a bottom here, here. These wicks, don't worry about them too much unless they just get crazy below. If they wick down some, that's okay. What we're looking for is the closing. Are they still closing inside of this trend, right? This one closed a little bit outside of this trend line. That's okay. We're looking for major confirmation of a trend break like here. This is a major confirmation of a trend. This trend is now over. So if you wanted to trade this trend, you could do that. And that's why we draw these vertical trend lines. So, and you can trade it either way. You can trade it short, or you can trade it long. Just know that when you're trading it long, you're going against the short-term trend, okay? But it doesn't mean that you can't catch it at the bottom of the support line, the support trend line, and ride it up to somewhere near the top resistance trend line, right? So you could take a trade here, ride it up to here. You could short here, ride it down to here. And just as long as it's staying in that trend line, then you should be fine, right? Because these trends last for a certain period of time and then they're over. So you can trade this trend line. Now, how do we know when we stop trading this trend line? Well, when it breaks the trend line. Look what happened when it broke that trend line. And why did that happen? Why did the price jump way back up here when it broke that trend line? Because you have people that are looking for that type of trade. They're looking for this to be broken. They're called breakout traders. And they're looking for this trend line to be broken. And man, when it did, they came in and bought it right up. But that doesn't necessarily mean that the continuation down is not going to happen. It also doesn't mean that this thing is not going to blow right up. It certainly could have. It could have just, continued right on up, busted through this resistance area, just, rallied. So how do we know what it's going to do? Well, we identify the next trend, right? So we started trending sideways a little bit. And we could have even drawn a very short-term trend line here. You really don't need to do that because you can kind of see without drawing trend lines that it's trading sideways. But if it makes you feel better, you can always, just draw one. It just takes a second. Also, when you're drawing these trend lines, make sure that you have your right extension turned on. So that when you draw them, when you get down here, you forgot that you had a trend line here and you might have a bounce in that area or whatever. So make sure and keep your right extension on. Left extension doesn't matter too much. You can do a left extension initially just to see if you had a lot of other touches in that area, okay? And then you can just turn it off. So now we're trading sideways a little bit. So and let's say that we were the bottom of our trend line, obviously was here at this support level, right? So we're trading up to this trend line, and really this might even be, trading in between this support level and this support level. So that could be our current trend, right? So we're trading there, trading there, trading there, and then when do we break it? Well, we broke it here, so let's wait for confirmation, right? Here's confirmation, boom. Broke it again, or we stayed broken basically. So we can now assume that sideways trend is over, right? Now we're going to have a new trend. These trends can last for, 3 or 5 candles, or they can last for 1,000 candles. You just never know. Excuse me. But the great thing about it is that you are going to know when that particular trend is over. So because once it breaks that trend, then it's over, and then we need to look for a new trend. So once that trend was over, now what's our trend? Well, we have a short-term downtrend, right? So we can draw our short-term downtrend lines here. So, and some people will do this, and I will sometimes if I'm in a hurry. Let me point this out to you guys real quick. Instead of drawing manually 2 trend lines, they'll draw one manually, and then they'll duplicate that drawing so that it's exactly the same channel, if that makes sense. And they'll just move it over, and there it is. That way you have an exact channel. Sometimes that doesn't work because sometimes your channel may not be exactly parallel. It can be, one is gonna continue this, basically it's either going to widen after a while or it's going to narrow after a while. So, they can look, because you can certainly have, as we all know, you can have, these triangles or wedges where they're not perfectly, parallel. Okay, so keep that in mind as well. So now we're in this new trend, right? So we're downtrending here and short-term downtrend, and you can trade this trend if you like, right? Or you can wait and say, hey, I don't short, right? So I'm only going long on this thing. I'm not gonna short because we're in a short-term downtrend. I'm not gonna go against the trend. So I'm just gonna wait, since I don't, let's say you don't short. So you're just gonna wait. So what are you waiting for? What are you looking for now? Well, now you're looking for a break of the trend, right? Look what happened. So when the trend broke here, you got a confirmation here that it busted. Then you can trade whatever the next trend is going to be. So, okay, you see it trading sideways a little bit, and then now we broke through a resistance level. So now let's draw this new trend that we're in, right? So here's our new trend. Okay, and boom, there you go. Yeah, you have a whole nother trend now. You're okay going long. So you can just trade this trend and all the way up, each time going long, or you can just hop in here on this confirmation candle and just ride it until the trend is over, right? So the only thing that you want to look at is when you're trading this trend, you want to take a look at where you enter your trade. So if you have your trend lines drawn like this, do you want to enter your trade here? Well, probably not, because you know that you're really close to that trend resistance level. So you're not going to get much out of that trade. So you want to start looking for trades down here by your trend support level so you can get the most out of, this is if you're trading, if you didn't take the trade down here. If you're looking to take the trade somewhere here, make sure and take it somewhere closer to that trend support level versus taking it up here. You could take it up there and then ride the bounce down and then back up. But two problems with that. Number one, you got in at a higher price than you could have. Second problem is what if that's the candle just before the break of the trend? Okay. So keep that in mind and trade with the trend and try as much as you can to take trades close to the trend line. A lot of people wouldn't even have gotten in on this particular candle because it's too far off of that trend support. They just wouldn't take it, even though it might blow right through that trend line resistance and continue on up. In this case, it didn't, but it certainly could. And did you miss that trade? Yeah, you did, but you played by your rules and you want to get in on trades that are going to be a better percentage in your favor. So you're looking to get in on that trend line support. Let me check questions here real quick. Useful link for TOS user. Auto pivot. Yeah, there you go. And they even have another one that I'll use sometimes when I'm in a hurry. It's called a channel. I think I put it up there. Yeah, this channel. So you can draw, you can just say here, and then you go here. I don't use it too much. Yeah, and then your channel here, right? And so it just draws them for you, and they're going to be perfectly parallel. And that's just called a channel. You can use that too. Okay, so I think you guys should be pretty clear on trading these trends, okay? And keep in mind, it doesn't really matter if you're trading intraday. It doesn't really matter what the long-term trend is. So if this particular stock was, had a long-term downtrend, it's okay to trade it up, intraday. Just don't take a long-term trade on it going against that particular trend, because what you're doing when you're trading intraday, you're microscoping in on that particular market, right? That particular stock or future, whatever you're trading. So you are actually, since you dialed into this, you are actually trading with the trend. You're just trading with the short-term trend because you're doing a short-term trade. So I just wanted to clarify that. Okay, we have a question here. Doc, the ES chart 611 at 10:30 a.m. on your chart, you said you wouldn't short during that time as it was a short-term trend. But how can you tell it's going to be a short-term and real-time trend before it actually becomes a short-term trend? Okay, I'm not sure what I said. Are you talking about, so let's look back here. It's 10:30 a.m. No, I think what I was saying is if someone, okay, so we're downtrending here, right? Let's take this particular trend right here, this short-term downtrend. So what I meant by that is let's say that since we're in a short-term downtrend, I said some people may not like to short, like me. I don't necessarily, the ES I will short. But regular stocks, I typically don't like to short, okay? So if you don't want to short and you don't want to go against the trend, then you would just not trade this trend. It doesn't matter that it's short-term, long-term, whatever. This particular one, short-term trend is going down. So if you took a long position, right? If you traded this candle from here to here, let's say, okay, then you're going against that short-term trend. That was my point. That since we're downtrend, and I only said that because I mentioned before, don't trade against the trend. So if you're taking a swing and you have a long-term downtrend, then you may second guess yourself whether you should be taking a long position when on a long-term trade when the long-term trend is down, right? But it doesn't matter as much whether it's long or short on the versus two different time frames. If it's a long-term downtrend on the weekly or daily chart, you can still trade up on an intraday chart because it's not a long-term trade. So that was my point. My point is that you would be going against, so going long here, buying instead of shorting, going long here, you would be going against the trend. Some people still do that, and that's fine. You can still trade, when it comes down here and bounces. Let's say this, let's say this candle here, and it bounced close to the support area. You could still take that long trade. I typically won't do that because I don't want to go against this short-term trend. Because we're obviously in a short-term bearish situation, and if we're short-term bearish, why am I going long? So that was my point. But your point is right on the money. Yeah, you don't know. Nobody ever knows what the length of that particular trend is going to be until it breaks, right? So, this thing could have kept on just going down, 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 down till whenever. The good thing about having these support and resistance lines, though, is areas to focus on where you might see a bounce or a change in price direction. Okay, I hope that answered your question. Sorry if what I said was confusing, but that's what I meant. So, so here, if you are not into shorting and you only like to go long, then this would be a good trend for you to have traded here short term. So again, we broke it. We broke the trend. This particular trend here, we broke it. And if you want, when you're all done, when it breaks a trend, you can certainly just go back and delete those trend lines. So they're not, sitting on your chart for however long. Okay, so once we broke this trend, now we're on a new trend, right? So confirmation break here. So you're not wanting to take a position yet. You want to watch and see what it does a little bit. And this thing could go either way. It could certainly come back down here and just keep trending down. Most of the time when it breaks the trend to the downside, you typically don't see it rally right back up into that trend, that previous trend. It can, but it's not typical. So just keep an eye on what the next trend is. So we kind of trended sideways a little bit here, then we had a dip, and then back up, and we got another trend line there. So, or another trend. Now these trends where they're just going straight up, those are very difficult to draw a trend line on. You can do it, but I don't know how accurate they are. So I like to see, more of these moves where you have several candles kind of next to one another. Here, you don't really have any candles next to one another. So these are a little more difficult to deal with. That's when you're looking at this, you might punch out to a little bit longer time frame chart and see if you can draw a trend line, a little bit bigger trend line that'll correspond with, this particular chart that you're looking at, that you dialed into a little closer. Okay, so let me go over a couple of things here that are not really chart related. And one of the reasons that we draw these is because it makes it easier for your eyes to see. So let's say that we didn't have this here. Let's just remove these trend lines. So you're watching this thing. Let's say none of these trend lines are here. Just kind of get a mental picture. You're watching this thing go up, go up, go up, go up. And by the time we're here or here, you're thinking, man, this thing is just rocking and rolling, right? So you're going to hop in, but you have no idea where you are in that trend, right? You have no clue. So, you end up hopping in at just a bad area. So these trend lines just help us visualize much easier at a very quick glance. It's so funny how once you put them on there, you're like, oh, man, now you totally see it. Whereas before, it was really difficult to see, where you might see, a pullback. And, these trend lines are they're just another tool that you have in your tool belt that can give you an indication that says, this looks good. You want to match it up with volume and all of the other things that we talked about, candle formations, everything else. So the more tools that you have that are saying, yes, this looks like a good trade, then you should have a safer trade, okay? Versus just having one indication. You know, you've got a bearish red candle bouncing off a support, and you hop in just based off of that, and that's it. You know, you're not looking at volume, you're not looking at anything else. So the more you have, the better, the more indications. And there's also times that the market will respect better than others. So, you know, it's not always 100%. Just because this thing touched, 10 times doesn't mean that on the 11th time it's going to touch again. But the more times you have, the better. And we want at least two. And then a lot of times I'll look at the third one as kind of maybe confirmation on the third one. So keep that in mind as well. And so if you did take a trade based off of a trend line, where would you put your stop loss, right? So if your trend line was back here, again, let's draw this little quick trend line here. So where would you put your stop loss? Let's say you took a trade here, right on the bottom of this candle. Well, your stop loss would be below the trend line, right? You wouldn't want your stop loss to be here because you're inside the trend. You wouldn't be here. You're inside the trend, and you could come down there and bounce off of that and go right back up. So your stop loss just below or outside of that trend line. And as you keep going up, you just keep moving it up. Just make sure that where you are on that particular candle is outside of the trend line, right? Don't ever put your stop loss unless, let me rephrase that, you can put your stop loss inside the trend line if it's the maximum amount of money that you're willing to lose on that trade, of course. But if the maximum amount of money you're willing to lose on that trade, if you're trading on this candle here, your maximum amount you're willing to lose is down here. Well, don't put your stop loss down here. Put it here, because if it breaks that trend line support, that's likely when it's going to be over. Okay, going over my notes here. We talked about that. Buying closer to the trend line support, it makes your risk better. It also makes your reward better, because it's less risky of a trade versus buying way off of the trend line, like on this candle, right? So your risk is better and your reward is better because you bought at a lower price than you did way up here. And once again, if you did buy on a candle way off of the trend line, then where's your stop loss going to be? It'll be way down here, right? So it's going to be outside of the trend line, way down here. So now you have a possibility of losing, if the trade does go against you, losing a lot more money than if you had bought here on this candle and your stop loss was here. Make sense? Okay, going over my notes here again. We talked about that, making sure that when you're on the daily chart that you're focusing on more obvious swing highs and swing lows. You want to connect two or more, the more the better. And then once you get into the time frame that you'll be trading on, whether it be a 5 minute or 1 minute, whatever, you can dial in a little bit more, and you can look at more of your short-term trends. Obviously, the more touches you have, the stronger that indication is, right? If you go over to pet your neighbor's dog, if you've been doing that the past 7 days, and 6 days out of 7 days, the dog bit you while you were petting it. Well, on the 9th day or 8th day or whatever, I would be expecting to get bit. Same thing here. So, the more times it touches, the more indication is that it's likely to do the same thing again. Okay, another thing to point out, I don't know if I can find an example here, but you can have a trend within a trend. It's kind of weird, okay? But you can have them, and it's usually on kind of these longer time frame charts, but I have seen them on shorter time frame charts as well. So okay, here's one that kind of can be used as an example. So let's say that this was a really solid trend support here, and you've really been hammering this, and then you come up here, and now you're hammering this top trend line resistance, right? But you see that you're not coming back down and touching the support trend line. Well, you could have a little bit of a trend inside of a trend. Okay, so you can actually take and you can draw another trend line here. So what does that let you do? That lets you see, okay, we could possibly see a bounce on this support trend line, right? And if it breaks through this support trend line, where is our possible next bounce? Well, if you don't have any horizontal support there, then look at the next trend line support. And that's exactly what happened here. So we're bouncing here, bouncing here. You've got a trend inside of a trend, right? Excuse me. And then once we broke that, this kind of other trend inside of a trend, where did we bounce? Right there off of that other trend line. So that will give you another indication where to look for a bounce. But you can and will see trends within trends. And on these longer time frame charts, you can trade those as well. And that's really what we're doing on these when we dial into a shorter time frame chart. We're trading a trend within a trend, if that makes sense. So if this was on, so this is on a long-term uptrend. We've already deciphered that, right? We know that the ES is on a long-term uptrend. So when you're trading on the 5-minute chart, when you're trading this downtrend, you're trading a trend within a trend. The same thing can happen on the same chart. You know, you could be trading a 5-minute chart, and you could see what we just saw on the daily chart, and you could be trading a trend within another trend. So keep that in mind. It can get a little tricky, but it does happen. And also, very important, whenever and this is why we draw these horizontal support and resistance lines here as well. Whenever you're trading inside of a trend, you can certainly look for, don't just only be looking for the trend line support and resistance there. You need to pay attention to the horizontal support and resistance as well. So when it gets down to those levels, be looking for a possible trend change at those levels. So if you're going, let's say you were going long here, right? I would be a little bit leery about going long if you started down here because you've got resistance right there. So keep that in mind. Okay, another thing, whenever you have news. So news can affect your trend lines, and you don't necessarily need to pay them a lot of attention. And why is that? So if I had volume here, maybe I could identify some news. The ES gets news too. You know, it's economic news. It makes it run. Economic data. So so this isn't a good example on the ES, but let's say that this ticker we're looking at was just a regular stock. You know, it's that one we were trading Friday. What was that? NOVN. So let's say it's NOVN, right? And it got news. Let's just flip over to it real quick. NOVN. Okay, so obviously got news, rallied, but I don't pay a lot of attention to that whenever I'm drawing support and resistance lines, or I'm sorry, when I'm drawing trend lines, because you're not going to have that news every day. So it's not going to factor in as much on, when you're trading it on a regular basis because it had news, whether it be earnings or FDA approval or whatever. And that's good news or bad news. You know, if you have bad earnings and it dips way down, well, yeah, maybe at the low there, maybe you draw a horizontal support line there. But I wouldn't worry too much about it when you're drawing your vertical trend lines because it's not something that occurs often. So I wanted to point that out. You don't have to ignore them entirely, but I wouldn't put as much emphasis on them because of the reasons that I said, because it's just not something that's going to occur on a regular basis. Okay, let's hit a couple of questions here. On the ES chart, okay, let me get back to ES. $6.11 at 11:40 a.m. Let's dial in here a little bit. 11:40, so right around here. So we were about here, right? Okay, when the price dipped to 42.21.50. Okay, that was our low of the day. What kind of confirmation would you require to say that it was the lowest point and that it would continue an upward trend? So, whenever that candle is forming, yeah, you don't have any confirmation yet. A lot of times, and you'll see it on both sides, making new lows and making new highs, especially if there's not any news involved. A lot of times when you make a new high, you will see a pullback. So if this stock popped up and went to 42.39, and then that was a new high of the day, a lot of times you'll see a pullback. Traders get a little nervous up there, that it's not going to continue pushing on through, and they'll start selling. And, shorters are like, oh, new high of the day, time to enter a short. But yeah, you don't have any confirmation until you start looking at other factors. Are you starting a new trend yet? So we're in this downtrend, and once we bounced, well, we broke the trend. So what does that tell us? That tells us that now we're no longer in this short-term downtrend, but we don't know yet what kind of trend we're entering into now. So we wait. So we trade sideways for a little bit, and then once you start seeing some, different candles, then you can draw your next trend, right? And then you know where the next trend is. Now, were you able to buy right at 42.21.25? Well, probably not. But if you wanted to be an aggressive trader and you said, hey, that's a new low of the day, and I know from watching this thing that oftentimes when it makes a new low, we get a bounce. So you could be aggressive and take that trade. You will typically wait for some type of confirmation, whether it be the new trend forming, or maybe we had some resistance here and we busted through that, and then we came back and retested that as support now, and we're continuing on up. So that's what I'll look for. And when you're looking at stocks, you want to look at the volume, the corresponding volume there, and that'll give you a pretty good idea of how much energy there is on that move back up. Is it going to be a serious move back up, or is it just going to be a short-term bounce like we saw here and then continue on down? Which is what happens a lot. A lot of times when you see these big moves down, you'll get that short-term bounce. What a lot of times we call like an oversold bounce, or maybe it was let's say this was just one big knife, a post-knife bounce. And then we get that, post-knife bounce. We get that post-knife bounce, but then we continue on with the original direction that we were going. I hope that answered your question. Okay. Make sure I'm getting all the questions here. Okay, so Jay has a question. Doc, how can you avoid or at least spot false breakouts? Yeah, good luck with that. So sometimes it can be tough. And what I like to look at is the candle formation. And I also like to look at the corresponding volume. So let me see if I can find one. I don't know if I can find how quickly I can find one, but let me look and see. Let's get on 1 minute on this guy. Dial in a little bit here. Okay, so maybe we could call this a false breakout. So let's go over what we see here on this. So let's say that we were looking to break this resistance level of 1558 here. And once we broke it, and then we confirmed that the break is happening, then let's say we got in for whatever reason on this green candle, okay? And this ended up being a false breakout, obviously, right? We trended back down. So what can tell us that this is a false breakout? Well, look at your candle formation, okay? So far, it looks good. It came down here, back below that support level, and then got bought right back up. So far, I'm excited. But if you look at the corresponding volume down there, I don't know if y'all can see that, but it is this candle right here, or this bar right there. There's not a lot of energy in that move versus the moves prior, right? Not a lot of energy there. You can also look at how much buying and selling you have in that particular time, during that time. So do we have a lot more sellers right now than we do buyers? You know, what does the energy of the move look like? Well, even though I like this candle, I like the fact that it came down here below this support level and got bought right back up. I do like that. But if you look at the corresponding volume on that, there's just not a lot of energy in that move. If you look at the corresponding volume on this move, even though it held support here, sellers are a lot more serious. You know, those two previous sell bars are bigger than the buy bar. So who's in charge right now? Sellers, right? Even though we're still, holding this, I wouldn't have gotten in here just because of that corresponding volume. And that's the reason that I had volume as our number one very first session that we had, is because it's that important. It can give you these indications. If you look at this corresponding volume on this nice candle, there was a lot of energy in that move, right? People were really wanting to break this so-called resistance level. I don't know whether it is or isn't, because I'm just kind of drawing lines quickly or whatever. But there was a lot more energy in that move. But then the energy kind of faded. And we see that all the time, where you'll have this huge volume come in and then nothing after that. Or you may have two big volume bars and then nothing after that. It just fades. So I hope that answered your question. That along with other indications can let you know that it's a false breakout. But sometimes these market movers, they can make it look perfect. They can have a lot of volume, and then they can help you push that price up and get you some big fat volume there, and it's a really good fake out. So, there's really nothing you can do about that. And that's why trading's risky, and that's why we have stop losses. So, wherever we want to put a stop loss, if we didn't pay attention to the volume here, and we didn't see that there was not very much energy in that move, where would we have our stop loss? Well, likely we would have it, somewhere down here below this, support level, right? So I hope that answered your question. Yes, even good traders get faked out. Believe me, it happens. So that's just where that's why your stop loss is your best friend. So we lose small and we win bigger. And if you can lose small and win bigger on your trades, as long as you have favorable trades. If you have all trades going against you and you're losing small, yeah, you're going to lose money, but you're doing something wrong at that point. So, you need to work on either learning more of, the basics of trading, or maybe you need to fine tune your strategy. There's a lot of different strategies out there that people use. I use several myself. So my main strategy, as everybody knows, is news and catalyst, but I will trade momentum every once in a while. I'll scalp it, and I'll trade breakouts, I'll trade VWAP breaks, I'll trade VWAP bounces. There's a lot of strategies, and as you get more time under your belt in trading, once you're trading one strategy and you're comfortable with it, you like it, it's making you money, you're consistently profitable, then you can introduce another strategy. Say, okay, well, I don't want to now I don't want to just limit myself to fill in the blank breakout trading. Now I want to start trading, VWAP bounces or whatever. There's a million of them out there. But I wouldn't take on too many at once until you're comfortable with one or two, and then kind of, expand from there. And some people never expand. Some people just do, let's say, breakout trading, and they're perfectly happy with just one strategy, man, and they just, become a professor on that particular strategy, and they're killing it. Only, issue is if you like to trade more, then, you typically need more strategies, because if you're a breakout trader, let's say, I'm just using that as an example, it's one of the more popular ones, then you have to wait for those to happen. And if you don't have those breakouts very often, then and you want to trade more often, then you might need more strategies. Okay, does anybody else have any questions? We're a little over an hour here, about an hour and 9 minutes, I think. Let me make sure while questions are coming in that I have I covered everything. Yeah, and if you guys missed last Sunday on part 1 of support and resistance, we went over a lot of other things. I just couldn't fit trend lines into it because I didn't want to have a 3-hour, 2.5 hour session, because I promised everybody we'd be looking at 45 minutes to an hour. So another question here, Doc, can you please go through how to read the price ladder during a trend breakout? So that'll be a whole nother class, or a whole nother session. I'm trying to get away from that class word. It'll be a whole nother session on the ladder, because that would take that's not just like a 5-minute deal. That's a whole session, maybe even 2 sessions. But we will go over the ladder in a session. I'm just trying to get the most important things in there first, because what we've gone over the first 2 sessions of volume and then support and resistance, even though it sounds so simple and basic, there are things that you really need to know to be able to trade. I've had many people already, I don't know how many, but over 10 me, hey, since I watched these 2, this support and resistance and this volume thing, I'm already having better trades. I'm already making more money. I'm more profitable. Thank you so much. And so that's the reason that I wanted to dial into these 2, even though they sound basic. Most people don't know the things that you guys now know about volume. They just don't know. They say, well, yeah, of course, when the price is going up, volume's there. Silly, of course. That's what's making the price go up, right? Yeah, but there's a whole lot more to volume than just that. Just like we looked at here. Hey, price is going up. Yeah, go ahead and hop right in there, buddy. You didn't look at your corresponding volume, and you're going to end up hitting your stop loss. So a lot more to it, and this is why I wanted to go over those 2, and they should give you guys. I'm trying to get a foundation built first of solid trading rules, things that you need to be looking at. This will help you guys. The volume and the support and resistance will help you guys to look at where to exit, where to enter, which is everybody's problem. Yeah, you can get alerts all day long. If you just want alerts and that's all you want, send me a private message. I can save you the $15 a month you're paying to be in this Discord server if that's all you want, because you can get those for free. They're very easy to get. I can show you how to do it. What we're here for are exactly what we're doing now. We're building a foundation to get everybody to where, if they're not there yet, to where they can start having more profitable trades more consistently, so that they can make money out. There's a lot of people in here that, man, they have a job and they don't like it or whatever, and they want to work from home, and they want to be able to do something where they're their own boss, and so they're trying to build a strategy and learn foundations and everything else. And that's what what this is for. But even if you want to keep your job, that's cool too. Whenever you're, if you want to trade pre-market before you have to go to work, well, all of these things are going to give you a good foundation to build on, and we're going to keep building on that. Pretty soon, we're going to be into what you guys will consider more, I don't know, bigger things in trading, things that you probably thought we would be learning right off the bat or going over right off the bat. But we've got to get this foundation first, because a lot of people don't realize about trend lines. There's a lot of people that don't draw support and resistance, don't draw trend lines. They just, whenever the price is going up, they buy. And then whenever, it pulls back, they sell. That's not a very good strategy. So, but we're going to get there. Let me address this question here. But yeah, we will go over the ladder and probably go over time and sales at the same time. I will make that a session for sure, and we'll go over a lot of other things too. We'll have a session on indicators, chart indicators, where we talk about EMAs versus SMAs and VWAP and Fibonacci's and standard deviation channels. We'll go over all that stuff, and you guys can just pick and choose what you want to try out. So next question, Doc, any comments about Archon? Not sure if you were still in and if you still like it for Monday. How can a bear jump in at $4, $5, or $6 after it dropped from 17 just that morning? Had a great swing from 587 to 7. The chat gave me confidence to stay in that trade. Thanks. So to answer your first question, yes, I'm still in that trade. I thought we were going to see more than we did on Friday, and I actually averaged up a little too early, but that's fine. I'm currently in at 50% of what I'm willing to commit on that trade, so I'm still not worried at all. As a matter of fact, it did what I hoped that it would do. Once it started coming down, I didn't want it to come down, of course. I wanted it to keep going, and I was hoping it would close at $8. But it started coming down. But I'm glad that instead of hovering around $7, I'm glad that it came all the way back down to that $6 level, because what I think may happen is I think that we just may have just a rinse and repeat deal on Monday. I'm hoping that people are going to say, well, hey, this thing's still cheap. I'm going to buy some shares here. We're going to run it up again today and sell it at $7 or $8 or whatever. But I am still in that trade. Yes. And how can a bear jump in? So the same way that, we do. I looked at it it doesn't show up on the weekends, whether it's hard to borrow, easy to borrow, none to borrow. But when I looked at it on Friday, it was hard to borrow. So yeah, all you do is you would just enter a short position when you felt comfortable that you knew the price was going to continue on down, and that's how you would enter and make money from 17 down to whatever it went to, $5 or whatever it was. So, and we talked about that before. All you do to enter a short position is, instead of buying first and then selling when it gets to the price level that you want, you sell first and then you buy when it gets down to whatever price level you want. And it works the same way. Let's say if you bought at $5, let's say you bought 1,000 shares at $5 and it went to $7. Well, you made $2,000, right? Well, the same thing is true when you're shorting. If you sell at $7 and it goes to $5 and you buy, well, you made $2,000. Okay, next question. Doc, if a trend forms pre-market, what are the chances it will continue after market open? So it's the same. If trends don't care whether it's pre-market, after hours, regular hours, they don't care. So the trend continues, even if it goes into the bell, it continues until it breaks. That's it. So, and you guys now should recognize, when the trend breaks, so if we drew a trend line here, right, kind of a wonky trend line, but I'm just doing this quickly here. So if we drew a trend line like this, well, it doesn't matter. Let's say the bell was right here. Well, it continued on the same trend, but then it came up here and, well, it didn't break here yet, but it did break here, right? So this is when it broke, and market doesn't care whether it's after the bell. Now, you do have a little bit more of a chance of it breaking at the bell, just because at the bell, that's typically on any given day when all of the stocks are the most volatile, which is why people like, day traders, they like trading at the bell, because it's volatile, right? You get a lot of price movement. I'm a less risky of a trader, as everybody knows. So I try not to jack with too much stuff at the bell because of the volatility is just, it's too much. You can go in the opposite direction too fast. So I hope that answered your question. So basically, the trend continues until it breaks the trend. No matter when that is. They can be, anywhere from 2 minutes to 2 days to 2 months or whatever. Okay, so next question. So bears still saw downside. Thank you for that and sharing your personal plan. Yeah, bears are always pretty much always going to see downside, and maybe it does have downside. I mean that's why trading's risky. Nobody can predict 100% accuracy what Archon's going to do on Monday or Tuesday or whatever else. But I still like to trade. I'm down a little bit, but nothing terrible. And that's something else I wanted to point out. I had a lot of people ask me in direct messages about stop losses and how much I'm willing to lose and all that kind of stuff. Well, again, that's up to each individual and your particular risk tolerance. I might be willing to lose more money than you. I might be willing to lose less money than trader C, right? I can tell you this, because this used to happen to me. And this is very important and it's very easy to identify. Okay, so let's say you enter a trade and it stops you out. If that makes you have a terrible rest of the day, if you're like, if it really bothers you and you're not going to be able to sleep that night, or you're depressed, or it makes you cry or anything like that, you're risking too much money. Whenever you lose on a trade, it should just be no big deal. Yeah, you lost on a trade and you don't want to do that very often. But if you're risking X amount of money and if you lose that money, if you're really, really upset about it, that is a huge red flag that your risk tolerance, you're risking too much on a particular trade. Okay, so whenever a trade goes against you, like right now, I'm red on WPG. I'm a little bit red on AHT. I'm a little red on Archon, right? But I'm not freaking out about it, and I'm not. It's not keeping me up at night. I'm not laying my head in my wife's lap and bawling about it because I'm okay with losing that much money. Otherwise, I wouldn't have taken the trade, right? So make sure and focus in on that, because risk tolerance is very, very important and may even be one of our next upcoming sessions that we have, because it's just that important. Because if you don't have good risk tolerance, you're going to end up losing all the money in your account, and then you won't be able to trade anymore. That will happen over time if your risk tolerance isn't where it needs to be. So if it's really bothering you, then you're risking too much. Just tap it down to where if you lose it, then you're like, that stinks, but I'm going to get it. I'm going to get it on the next one, right? That's where you know that your risk tolerance is correct. Okay, I hope that, I don't know if you guys had a question about that, but I want to throw that in there anyway. So, okay, well, we're going to call it. We're about an hour and 20 minutes. I need to take my sweetie to the Care Now facility and hopefully get her some meds that'll make her feel better. So thank you guys for attending. Let me look real quick how many people we had. That's not a bad one. We have 80 people, and we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 80 people and 11 for the live session. So that's good. I wish we had more people. Maybe we need to find a time that can accommodate more folks. I know it's difficult to do that sometimes, but I promise I'm doing the best that I can. That's why I had this one a little bit later, because a lot of the West Coast people were saying, hey, that's too early. But I don't really see that it made an impact. We don't have, a considerable amount of more people today. As a matter of fact, I would say we probably even have less. So, take advantage of these sessions, because really that's what you're paying for. You're paying for these sessions mainly because alerts, that's easy. That's definitely the easy part. Okay, let me just make sure. Okay, so we don't have any other questions. Thank you guys so much. I'll have a great rest of your weekend, and I will see y'all in the morning.